Thanks, Maria, for the reminder on Perion Networks. We're having the conversation with the CEO in the second half of the show today. Right now, let's talk about the intraday action. Some more. Scott Bauer joining us, CEO of Prosper Trading Academy, as the NASDAQ just touches the futures, at least. And I'm a futures guy versus the index, Scott. More time to trade means that we've got a wider sample set of data, and we got so close to that record, pulled back a tad. What do you think of what we're seeing here today?
You know, I think the action is pretty sideways. A lot of positioning ahead of the big reports that we're getting, and that's why can't really make up its mind. Maybe not following the rest of, the rest of the market overall. Microsoft to me is going to be the big one, even more so than Alphabet in terms of overall market direction. But you got a lot of reports today that's certainly going to affect across the board.
So Facebook playing a role here on another social media sell-off. We talked Snap and the sell-off there. Do you think we should be nervous about Twitter too this afternoon?
I don't think you need to be as nervous for at least for the same reasons.
Okay.
So Facebook has its own issues. Facebook is a whole different animal than what happened with Snap. Snap, obviously, the big concern with the relationship with what's going on with Apple and the pullback that we saw from there. Now, Twitter, you may see a little hangover from there. I don't think it would be as severe as Snap. I don't know that you're going to see big mention of that in the reports. Obviously, you want to see the user user numbers there. That's going to be the big thing for Twitter. From a technical standpoint, it is trading just below the 200-day moving average here. So does have the possibility for a big drop, and there's a big move that is expected in there. But I don't think that we need to have the same concerns as we saw with Snap and or Facebook.
So Facebook down, Microsoft and Alphabet, Microsoft in particular really doing a lot of legwork here. Obviously Tesla in terms of the mega caps is out in its own world, but for the kind of classic FANG Plus suite here, Scott, do we need to get Microsoft and Alphabet to really hit it out of the park, or do we worry what happens if the list of FANG names to the downside grows?
I don't think we need to hit it out of the park at all. I just think that we need to stay away from any of the existential news out there that may really just take a big hit on these stocks. I think if we stay away from that, metrics are decent, revenues are good, bottom line revenues are good, and there's no mention of what may happen in the future, whether it's in regards to Apple or anything with supply chain or anything, then I think that's overall good for the market. I do think there is bigger downside risk overall than we have upside potential on these reports. So I think with good reports, we probably, maybe trade a little bit higher. I'm actually bullish on Microsoft. Alphabet is a crapshoot to me, to be quite honest. But I think there is more downside risk, and that's what I think you're seeing priced in also volatility-wise, based on what we've seen with Facebook and Snap. I think you're seeing some of that drift in to those expected moves into the volatility for those stocks.
Why do you like Microsoft more than Alphabet coming into the report this afternoon?
I think they just cover the bases. They have so much more across the board different revenue growth. I think what you're going to see with Azure is going to be fantastic. And I can't see Microsoft dropping a bomb. I just don't see it. So maybe we don't see the stock moving up 3 to 5%. But I think on any pullback, and when I say any pullback, I'm talking minor, Oliver. I'm talking, 300 level and higher, which I don't see. You got to be a buyer here. And I just think with Alphabet, based on the charts, the expected move is about $110 to the downside. That puts it to about $26.80. I actually think it has a possibility on any sort of bad news to hit a big low that we saw just a few weeks ago down at around 26.25. That's the point that I'm looking for, where I would step in and be a buyer.
All right. And let's do some trading triage on Snap, Scott. The bold trade that we did ahead of the report got blasted, of course, but your risk was defined per usual.
Yep.
Are you still waiting for a potential comeback? Do you double down? Do you bail out? What do you think after the huge move?
Okay, so first off, as a trader, I never double down just to double down because I've had a losing position. That is a recipe for disaster. So when I look at Snap and I look at that position and being so bullish and full disclosure here, yeah, I took it on the chin, but again, it was completely risk defined. The option that I'm long, the short expired worthless, which was fine. The option that I'm long this week is also going to expire worthless. So when I look at Snap now, where do I want to go from here? I don't know. It's in uncharted territory, to be quite honest with you. I don't see a big snapback, no pun intended there at all. I probably see a range-bound trade. I'm not doing anything in Snap. I just don't see anything. But I think the biggest lesson that traders, investors can really take from that is don't let your emotions get the best of you. Don't double up on a position because you just say, oh my God, it was good at that price. It's got to be better at this price. That's just not a way to trade.
All right, I like that lesson. I'm going to take that one to heart. Maybe not so quick to fire the second bullet if it doesn't go your way the first time. Scott, thanks for walking us through it.
Thanks, Oliver.
All right, Mr. Bauer joins us from Prosper Trading Academy.